shortly. Let's get back to Starbucks. As we pointed out, the shares are up this morning. Sales in its top two markets, the U.S. and China, climbing at least 6% for the quarter. That is same stores and comps, or what we call them. The company also increasing its forecast. Joining us now, first on CNBC, is Starbucks President and CEO Kevin Johnson. Always nice to have you, Kevin. We are a long way from that day that morning you and I shared in Boston. I think it was June of 18, where things were a bit tougher. And you've really delivered over this last, let's call it 14 months. So I guess, given a quarter like this, my question and those of investors is, can you keep it going? The 7% comp number in the U.S. seems somewhat extraordinary.
Well, David, you're right. It was a year ago that we outlined our growth at scale agenda. And growth at scale for us is all about focusing on the most important things and then executing with discipline. And that's what's driven our results. You know, certainly Q3 was a very strong quarter for us, but growth at scale is more about driving predictable, sustainable growth for the long term. And so much of the work that we've done over this last year has not only delivered results, but it's laid a foundation, I think, for sustainable growth against our growth model.
You know, in the U.S., as I said, up 7%, and comp transaction growth 3%. So not just people spending more, but a lot more people, more people coming in and doing more business overall. What's behind that? Is that because in the afternoon and the efficiencies you've created and the ability you've had in terms of delivering marketing to that hour part that has sent more traffic in?
Well, David, we saw transaction growth in all day parts in this last quarter in the U.S. And it's really driven by three things. First, it's the customer experience we create in our stores. And I attribute that to the 400,000 Starbucks partners who proudly wear the green apron, and all the work we've done to simplify the work for them, automate administrative tasks so that they can focus more of their time on the customer. Second, it's about new beverage innovation. And the beverage innovation's been all in our cold platform that's resonated with customers. It's Nitro Cold Brew, it's our refreshers, and that's helped us lift the afternoon. And then third, it's our digital customer relationships. You know, we grew active rewards members, I think 14% year on year in the quarter in the U.S. to 17.2 million. So the combination of a great in-store experience, beverage innovation, and digital reach is really fueling the growth in transaction comp. And we think that those are the right three things to focus on, and we've made great progress over the last year in all three of those domains.
Finally, before I hand it off to Sarah and Carl, China, which we've spoken about in the past and has been somewhat problematic in terms of what we've seen, flat comp store sales, for example. Not this quarter, of course, up 6%. 3,900 stores at the end of the third quarter. Same question, though. Can you continue, and do you expect to continue to see those kinds of numbers in terms of both comp transaction growth and same-store sales?
Well, you know, certainly China and the U.S. are two targeted long-term markets. And I was in China just last week, and the work that our team has done in China over this last year is also phenomenal. And it also sets the foundation for continued long-term growth. Look, we're committed to the market in China. China is a huge stage to perform on. The addressable market for coffee is large, and it's growing. And with the work that we're doing to create a great customer experience, beverage innovation in China, they released a set of cold beverages called Modern Mixology. These beverages are based on coffee and tea that were invented in our Shanghai roastery, and they deployed them throughout China. They resonated with customers. We enhanced the rewards program in China, and that was launched last December. We now have over 9.1 million active users in China. It grew 36% year over year. So the same three ingredients, a great experience in our stores, beverage innovation, and digital, is also fueling China. And we're bullish for the long term in China.
I know you got a question on the conference call last night, Kevin, about delivery. And it's obviously something that Wall Street is excited about. You said you guys are in the early days of it. You're experimenting with Uber Eats, I know. But how do you think about that as a long-term growth opportunity? And what does that even look like? Do people order drinks, delivery?
Yeah, well, first of all, Sarah, I think delivery is an example of consumer desire for the need state of convenience. And a lot of that's driven by the digital mobile revolution. With the mobile phone, you have convenience for all sorts of things in your life. And so to be able to order on your phone for Starbucks, either for pickup in the store or delivery, we are enabling that need state of convenience that we think is complementary to the third place experience that we create in our stores. Now, the delivery market in China is much more advanced. You just think broadly about how the Chinese consumer has embraced delivery. And that's why in China, we saw roughly 6% of our total sales was driven by delivery in China. Starbucks delivers, and we do that in partnership with Alibaba. Now, here in the United States, we've got a great partnership with Uber Eats that we piloted last year. We then rolled out to 11 markets. We now have announced that we're going to roll it out nationally. And in the U.S., I'd say delivery is still in the early days. And, we're optimistic about it for the long term. But this last quarter, it did not contribute meaningfully to our comp results. But we do think in the future it's going to be a growing part of it. And that's why we're investing in it.
Kevin, I got to ask you about this equity stake in something called Brightloom, just the latest in what we've seen in terms of restaurant technology purchases among you and some of your competitors. What does it bring you, and is it the beginning of even more acquisitiveness in the tech space and helping you understand what consumers want even before they tell you?
Yeah, well, Carl, we know that the digital customer relationships that we create are a key part of our strategy, and it's a key part of any modern-day retailer. You have to create an experience in your stores that becomes a destination for your customers, and then you extend that in-store experience to a digital customer relationship. Now, we've had great success doing that over the last 5 years. We call that our digital flywheel. What we've done with Brightloom is we've recognized that the digital flywheel we've created really is servicing our company-operated markets, primarily the U.S., Canada, the U.K., Japan. But most of our other markets in Europe, throughout Europe, Latin America, South Asia, are licensed markets. And those licensed partners do not have the digital flywheel capability. So the first priority with Brightloom is for Brightloom to focus on a cloud-based, software-as-a-service digital flywheel that services the Starbucks licensed partners and the multiple brands that they also operate in their markets. But Brightloom is going to open it up to all restaurant merchants in the industry and have a cloud-based software-as-a-service offering for them. So we're excited about the equity stake that we have in Brightloom. We got that equity stake by licensing elements of our digital flywheel to them. We've got a seat on the board. Adam Brotman, the former chief digital officer here at Starbucks, is now the CEO of Brightloom. And I think Brightloom's going to do some great things, both for the overall industry as well as the Starbucks licensed partners globally.
Yeah, I mean, if Kramer were here, he'd be talking about the digital flywheel. Always talks about Starbucks as a technology company. And I think if you read some of the notes this morning, you'll see investors are bullish because they think your competitive advantage, Kevin, is the technology, is the amount of people you've added to the rewards, and that you've got sort of digitally ordering. What sort of advantage has that given you in practice that you're sort of reaccelerating the growth profile of the company right now?
Well, I think about the overall differentiation that we deliver in the market. It comes from a variety of things. First of all, it comes from the coffee that we source from farmers around the world, the craft that our partners in our stores practice as they handcraft those beverages for our customers. It comes from our beverage innovation, and it does come from digital. We're using technology actually to automate administrative tasks in our stores that free up our partners to better connect with customers. We're using technology now to extend the customer experience we create in our stores to a digital mobile relationship. The personalization engine that we've created now is really providing personalized, relevant offers to our customers, and they're responding. So I think at the center of many of the things we're doing, we're using technology really to amplify the inherent differentiators that Starbucks has always had. And so we're very optimistic about the foundation that we've laid over this last year with growth at scale and how that's going to allow us to deliver predictable, consistent growth for the long term.
Kevin, we'll end on a couple of quick macro questions. How would you rate the state of the consumer, and are you having any trouble in terms of the employment market finding qualified people?
Yeah, I'd say, from a macro perspective, I think consumer confidence, consumer spending, engagement is very good. In fact, we saw all-time highs in our customer connection scores, and that's a tribute to the work that our partners in the stores do, but it's also a reflection, I think, of the attitude of the consumer in the United States. Certainly with unemployment so low, we're very fortunate because we've been a company that always invests in our partners, whether it's providing health care to part-time workers of 20 hours or more a week, whether it's our Starbucks College Achievement Program in partnership with ASU, and candidly, partners are proud to wear the green apron. And so, we've had no trouble attracting partners. In fact, just this week we announced we have hired 25,000 veterans and military spouses, and over the last several years. And so, we're going to continue at a run rate of hiring roughly 5,000 veterans and military spouses. And it's just another example of, I think, the fact that people are proud to wear the green apron and proud to be a part of something that is bigger than any one of us.
Well, Kevin, we appreciate, as always, your willingness to take some time with us. Thank you.
Thank you so much, guys.